Joining me now is David Busch, Co-Chief Investment Officer at Trajan Wealth. David, thank you so much for joining us this morning. How's everything going?
Good morning. Thank you. I'm glad to be here.
So, David, let's start. Just what are you tracking most closely as trading gets underway? You just saw Citigroup ring the opening bell. What are you looking forward to this day?
Yeah, so there's a couple of key themes that I'm watching. So I'm a macro top-down investor. And so really the key topics for me are the inflation data, labor market data, and GDP growth. So today we had initial jobless claims that came in better than expected, and continuing claims that came in better than expected, further strengthening the idea that we have a relatively strong labor market. Meanwhile, inflation pressures continue to rise due to the war in Iran and global energy prices.
Now, NVIDIA, the largest component of the Global X NYSE 100 ETF, reported earnings yesterday. If you didn't know, I'm assuming you did because everyone's talking about it. What are you taking away from the numbers and Jensen Huang's subsequent remarks?
Yeah, the numbers were absolutely fantastic. I mean, and what we learned is that their revenue growth has eclipsed last year's by 80%. So year-over-year revenue growth is up 80%. Data center revenue growth is up north of 90%. So we're still seeing quite a bit of growth within NVIDIA. Now, a couple of things that I want to point out is one is that investors are watching for, will we continue to have this AI infrastructure build out? What will be the demand? And I know that there's contracts in place that sort of give NVIDIA visibility into their cash flow projections over the next several quarters. Interestingly, NVIDIA announced an $80 billion stock buyback and increased their dividend per share. And what's interesting about that is that really what NVIDIA is signaling is a couple of ideas. One is that they have positive free cash flow. They want to return some of that back to investors. They've also signaled that they believe, as a management team with that $80 billion buyback, that in terms of the use of that cash, the best investment for them is to buy back their own stock, which is telling as well. So that would signal that management believes that it's either fairly valued or even slightly undervalued.
Now, meanwhile, investors are also keeping a close eye on the conflict in Iran, with the price of ice-burn crude oil trading at about $107 a barrel. How is this impacting your investing strategy moving forward?
Yeah, so with inflation, global energy prices will permeate inflation across the economy. Oil prices bleed into every corner of the economy. And so what we're seeing is that with our K-shaped recovery, that those on the bottom half of income earners in the United States, they're being stretched pretty thin between rising energy prices, pain at the pump, coupled with rising debt loads in longer, higher for longer interest rate environment. So they're getting squeezed, and ultimately, what I think will happen is that the consumer will pull back, and we're starting to see that switching from consumer discretionary into consumer staples. So that's what I'm focused on mostly is that consumer demand and their health, their financial health.
Now, I want to talk about the Fed, and Kevin Warsh will be sworn in as the new chair tomorrow. What will he need to do, in your mind, in the short term to really ensure economic stability, especially after what you just mentioned?
So one, he has to build consensus amongst his peers. And interestingly enough, for the first time, I think, if memory serves, in about 80 years, that the outgoing Fed chair, Jerome Powell, will remain a voting member of the FOMC. So that means that Jay Powell is still there over the next couple of years or 18 months until his role as a Fed governor, his term comes to an end. So Kevin Warsh has to, one, build consensus amongst his peers. Two, they're in a very tight predicament because on one hand, fiscal stimulus, the U.S. government has their foot on the gas pedal, the Fed has their foot on the brake, and we have rising inflation due to the war in Iran. So they're walking a tightrope. And right now, my expectation is that rates are going to be higher for longer, And there is a potential for the Fed to actually increase rates towards the end of the year, which rising rates means that risk assets will typically sell off. And so really that's what Kevin Warsh is walking that fine line. And so we'll see, a jump ball between labor markets and inflation. They're going to squash inflation first because the labor markets are holding up pretty steady right now.
Certainly, David, something to watch moving forward. David Busch, Co-Chief Investment Officer at Trajan Wealth. David, thanks so much for joining us this morning.
Thank you for having me.